This is our team members. Part A, segmental reporting.
Now let's talk about background of Maybank. Maybank is the first bank in Malaysia and it was established in 1960s. Maybank is founded by Malaysian business tycoon Hu Tak Tuat and it is the largest listed company by market capitalization on the Bursa Malaysia in 1962. Maybank is also one of the largest banks in Southeast Asia with a total asset of exceeding $183 billion and net profit of $1.92 billion in 2014. There are over 2,400 branch offices of Maybank in 20 countries and it has correspondent banking relationship with 700 foreign banks throughout the world. Maybank has a vision which is to be a regional financial services leader as the company continues to drive growth, create new capabilities and build new franchise. Maybank also has a unique mission which is humanizing financial services and has been an essential part of the regional landscape for over 60 years. This shows that Maybank is committed to providing people with easy access to financing at fair terms and pricing. Next is about the chief of decision making, which is the CEO of Maybank itself, Datuk Khairul Saleh Ramlias as Group President and Chief Executive Officer and Executive Director of Maybank that has been appointed on 1 May 2022. The full responsibility of Chief Officer Decision Making is allocating resources to operating segment and assessing their performance. The CEO makes key decisions regarding resource allocation. The CEO works closely with senior management to develop a resource allocation strategy that aligns with the company overall objective and goals. This involves determining how financial, human, and technological resources should be distributed among various operating segments to maximize efficiency and profitability. The second responsibility is to make strategic planning align with the company's objective and goals, which involve highlighting their crucial role in setting the direction for the organization and ensuring that all strategic initiatives are in line with its overarching mission and vision. And the last one is risk management, which is identifying and reducing potential risks to the company operation and financial health. This includes evaluating market risk, operational risk, regulatory risk, and the other potential threat to the company. Next is type of segment. The first segment is Group Community Financial Services, which contain the full range of products and services to individual, retail SMEs, and mid corporates such as consumer banking, small, medium enterprise, and business banking. The second segment is Group Global Banking that contain the full range of products and services to group corporate banking and global market, group investment banking, and group asset management. The last segment is Group Insurance and Takaful that contain business of insuring all classes of general and life insurance business offered to individual and or corporate. Second is segment by geographical location, which is Malaysia, Singapore, Brunei, Indonesia, and Cambodia.
Operating segments are only required to be reportable if they exceed the quantitative threshold. There are three types of quantitative threshold that the company can use. First is revenue. Its reported revenue from sales to external customer and inter-segment sales is 10% or more of the combined revenue, internal and external, of one operating segment. The second one is by profit. The absolute amount of the segment's reported profit or loss is 10% or more, the greater of the combined reported profit of all segment reporting profit or the combined loss of all segment reporting profit. Last is by asset. The segment assets are 10% more of the total assets of all operating assets. According to the calculation of 10% of tax of revenue, we can see that only 3 reportable segments identified, which are consist of Group Community Financial Service, Group Corporate Banking and Global Markets, and Group Insurance and Takaful. After determining the reportable segment, the entities should use formula total external revenue reportable segment divided by total revenue of all segment times by 100 to find the 75% of tax. Using this formula, we add up RM8141,667 million plus RM3563,479 million plus RM1626,663 million divided with RM12799,552 times with 100, and we would get 104.22%, which are more than 75%. The trend of the company showed that Maybank total asset increased since 2019 to 2023. In 2023, Maybank increased their asset by financing and loan, which is 61.4% compared to 2022, 60.5%. The strength of the company showed that despite challenges such as lower unrealized mark-to-market gains on revaluation of financial liabilities and realized losses on derivative, the company has managed to maintain overall profitability and mitigate potential losses. The weakness of the company shows one overhead expenses increases by 37.1% when compared with 2022, significantly driven by higher personnel costs. The opportunities of the company shows one, given the improved regional economic outlook, Maybank Group is poised to capitalize on identified business growth in key areas of Group Community Financial Services and others.
Part B, Interim Report MFRS 134.
Basis preparation for Maybank Banking Berhad. Maybank uses discrete methods since the interim financial reporting is prepared quarterly or periodic basis, in accordance with the requirements of Chapter 9, Part K of Listing Requirements of Bursa Malaysia Securities Berhad, MFRS 134 Interim Financial Reporting, and IAS 34 Interim Financial Reporting. Accounting policies is used in preparing the interim report. The first one is MFRS 116 Property, Plant and Equipment. For subsequent measurement, Maybank uses cost model to measure the PPE and straight line method over its estimated useful life to calculate the depreciation of PPE, except for freehold land. The groups and the bank's property and equipment are stated at cost less accumulated depreciation and accumulated impairment loss, if any. Second is MFRS 138 Intangible Asset. For subsequent measurement, Maybank uses cost model also to measure the intangible asset, stated that the intangible asset is measured at cost less any accumulated amortization and any accumulated impairment losses, except for software in development, which is not subject to amortization until the development is completed and the asset is available for use.
From the report, we can see that there are 5 types of interim reports prepared by Malayan Banking Berhad, which are unaudited condensed income statement, unaudited condensed of comprehensive income, audited condensed statement of financial position, audited consolidated statement of changes in equity, and lastly, audited condensed statement of cash flows. Maybank's accounting period ends on 31st December annually. Now, we are referring to the interim report on the 4th quarter, which is from 1st October 2023 to 31st December 2023. For the unaudited statement of profit or loss and comprehensive income, the reporting period of the 3 months current interim report are from 1st October 2023 until 31st December 2023, and 12 months for a comparative year are from 1st January 2022 until 31st December 2022. This reporting period is the same as for the audited statement of financial position. However, for the audited statement of changes in equity and statement of cash flow, the reporting period is 12 months for current period, which are from 1st January 2023 until 31st December 2023, and also 12 months for comparative period, which are from 1st January 2022 until 31st December 2022.
The first adjustment that we propose is reducing balance method for depreciation of property, plant and equipment under MFRS 116. For the year ended 2023, the cost of PPE is 2,563,510,000. The accumulated depreciation is stated at 901,464,000. The annual rate of depreciation is 20%. Assume that Maybank Berhad adopt reducing balance method for the depreciation of PPE. As we all know, the formula for RBM is cost minus accumulated depreciation times by depreciation rate. Reducing balance method gives the higher depreciation expense in the initial years, results in lower profit, and therefore the tax expense for Maybank will be lower. This is the extract of financial position for Malayan Banking Berhad as at 31 December 2023 before and after adjustment. Before adjustment is when Maybank used straight line method. After adjustment is when Maybank used reducing balance method. PPE is stated lower at 2,231,024,000 for current interim.
For adjustment 2, I would like to propose Malayan Banking Berhad to transfer part of their owner-occupied property to investment property. This is because investment property will give more benefit to Malayan Banking Berhad. Rather than investing a lot of money on the property for the company's use in administration or production, it is better to generate income from it by renting it out or for capital appreciation where the fair value of the property can increase. In addition, in MFRS 140 investment property, there will be no depreciation. Now, let me show you an example if Malayan Banking Berhad applies this adjustment. On 31st December 2023, a building amounted to 500 million was transferred from owner-occupied property, which is MFRS 116, to investment property, which is MFRS 140. This is because there was a change in use of the building. These changes will result in the amount of PPE, where it will decrease by 500 million, and the amount of investment property will increase by 500 million. This is an example before and after the adjustment from the extract of Malayan Banking Berhad statement of financial position as at 31st December 2023. Before adjustment, the current interim amount of property, plant and equipment is more higher than the comparative year 2022, while the amount of investment property before the adjustment is also higher than the comparative year. After the adjustment, the current interim of property, plant and equipment is decreased by 500 million, which is lower than the comparative year where the amount remained unchanged like the before. And for investment property, it is increased by 500 million. Without needing Maybank to purchase more investment property, this investment property amount has the possibility to be higher by an increase in the fair value. This is more beneficial compared to PPE, which only has the possibility of the amount being decreased due to depreciation.
That's all from us. Thank you.